Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for today. Well, we have a special episode. Given the market price action, we are going to have a 30-minute conversation with Beimnet Abebe from Galaxy Trading, where we get his take, because Beimnet has been calling for prices to be lower for now on this show. Gosh, at least a month, right, Phineas? Last week we was so bearish, I called him a bear, Beimnet the bear, on the intro to the show. And as we recorded last week, the Bitcoin price was 101,880. Now we're below 90. I would say Beimnet looks pretty vindicated here, but we're going to talk to him about where does he think this is going. I want to point out that he makes this very clear too. He is a long-term bull. I am, of course. I don't think will surprise anyone. Finn, I'm a long-term bull.
He's been consistent, and I can't tell each week whether we want Beimnet to what we want him to say. It's like, do I want Beimnet to say that we're at a high or that we're bullish or bearish? I mean, we all agree that we're long-term bullish,
right?
But does short-term bearishness allow an opportunity to get in at a lower price, which is something that seems rare in recent years?
That's what you were saying, right? Like, I haven't sold any Bitcoin. Have you sold Bitcoin?
I've never sold Bitcoin in my life, not one time.
So you've only bought. So what's your reaction to the lower prices now?
I mean, I'm less experienced in trading than certainly you and certainly Beimnet. It all makes me nervous when the price goes down, but I've been in the market for a while now, so I know that if I'm bullish, then I'm bullish, and I should be buying at a low point. So, do I always follow through with that? Or,
it's hard, man. They say, right?
No comment.
They say when there's blood on the street, buy property, right? Like, and we were talking about what forms a bottom in this interview with Beimnet, and one of the things is you're like, oh man, those people were so smart. They bought the bottom, right? And it's like, well, usually actually people that buy the bottom create the bottom by buying, right? Like it's not so much that they timed it perfectly. But again, that would mean people in size, right? Like, but oh my gosh, that whale, they really timed the bottom. No, whales can create the bottom. So I also would say that even just in the history of the show, how long have we been doing the show? 4 years? We were recording this show, go back and on our YouTube or on our Spotify, we've been recording the show through the entirety of the prior bull market and bear market, and now the last 2 years of this bull market. We were recording here at 16.5 to start January 23.
Exactly, and you can't. What I've learned is you can't have a thesis only in the good times. The whole point of having a thesis is that when the market is shakier, your thesis, that's the only time your thesis becomes relevant.
Yeah.
It's like if you're long-term bullish on Bitcoin, which of course we all are, then these are the opportunities to prove that thesis.
That's what I think. But it does take some conviction, and it can be scary when things are going down. Look, before we get to the interview with Beimnet Abebe, I've got to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thank you for having me.
Well, I opened the show last week by saying Beimnet the bear is going to come on and be bearish and explain why he's bearish. And when we recorded last week, the block clock over my shoulder said 101,880. It now says 89. So materially, I have to say, Beimnet, despite my consternation, because I am a naturally bullish individual, and this really pains me to say this, Beimnet, you were right.
Appreciate
And I would
that.
ask you what your thinking was, but of course you've been explaining it in detail on this show for the last month and a half, maybe month.
Yeah.
Where are we now, though? Now that Bitcoin has come down to the high 80s.
Yeah.
How does your thinking of the positioning changed?
So there's some really interesting points that are starting to come up, and this speaks to the topic of reflexivity, right? When something moves higher, it becomes more likely to move higher. When we talked about this concept with DATs, and now you're going the other direction. And so I'll give you an idea. I mean, I think we were doing the math today on the desk, and there's some DATs, like MSTR, for example.
MicroStrategy,
they have
strategy.
Yeah, strategy. They have about $600 million in dollar liabilities on a next 12-month basis, and now their MNAV is essentially at 1, right? And so, is he going to sell Bitcoin to finance the cash outlays that he needs? Probably not. And is he going to sell stock to finance
the premiums he has to pay? Or
that would be tough to do, and probably not a good decision given that you're not trading at a premium to the underlying assets. And so, they're stuck between a rock and a hard place. Obviously, they can take out some credit versus that. But, the buying of Bitcoin has at least stopped, and the risk is more flipped the other direction. And you've got a similar story with BitMine, which, I think is trading close to parity now with net asset value, which therefore means that their ability to purchase
should be reduced
or zero,
right.
unless they already have
right.
cash on hand. But now you're in interesting territory where, basically anyone that's purchased MSTR since late 2024 is underwater. And there's a lot of BitMine folks that are underwater. There's a lot of other DAT positions that are severely underwater. And an interesting dynamic with equity plays on crypto is that you've got some tax dynamics to that. And so, what I think might actually start happening now, given the magnitude of the move, is that you might actually end up having tax loss harvest selling to add to the sell pressure
on the equities.
Yeah. Right? And, similar construct in IBIT and ETH, there's a lot of folks that have purchased it that are now underwater on those positions. And so, you have the accounting rules in securities world where you can't repurchase it for another 30 days.
So maybe sell it now in order to possibly rebuy in the new year.
Potentially.
I mean, because normally you think, when is tax loss harvesting season? It's like December.
Yeah.
Because you also might still want the position. You're not necessarily selling it because you don't want it. You're selling it to realize the tax loss.
Yeah.
To offset other gains.
But
you might want to buy it back.
You might want to buy it back. But here's the thing. You can, sell the security version and buy the crypto version,
True.
right? And so,
True.
it doesn't necessarily mean that.
Yeah, could you sell BlackRock ETP and then buy the Invesco ETP?
No, there's rules about
They're
doing
too
something.
similar.
Yeah, they're too similar.
Okay.
But in theory, if you go from a security to a commodity,
right.
we don't give tax advice on this show.
Agreed.
But
yeah.
but there are some interesting tax dynamics that are now developing, as well as some capital market things
that could add to the reflexivity to the downside.
Correct.
Yeah.
And then, just from a sentiment standpoint, again, this move has been pretty quick. It's been a week and we've dropped from 102 to 89, right? And so I still think that there's a disparity between sentiment and positioning. Even though prices moved a lot, the movements have been very quick.
Yeah. So you think people are still net long?
Yes.
Net too long.
Not too long, because one, the liquidity's gone down, the vol's gone up. You're not meant to hold the same size anymore. And then the other thing is the alt markets have completely
50% or more on a lot of them.
A lot of them. And,
yeah.
ETH is as we speak sitting below 3,000. Solana testing 130. And a lot of the reason why crypto's gone up is because you've had the deregulation story, you've had the ETFs launch, you had the Sol ETFs launch this week,
right?
Ripple ETFs, etc. And so again, it's an asset that's lacking a catalyst,
right?
We
got a lot of good stuff.
We got a lot of good stuff that was priced into the market, and you basically priced the tokenization of every asset on a go-forward basis and brought it to the present value in terms of what value is going to accrue to the blockchains in theory. And I feel like a lot of that was just so baked in to, these assets.
Do you think the tokenization of everything was part of that bacon? I don't feel like that's.
I mean,
I think it's still just like industry pros talking about that to me.
No, I mean,
Definitely the like Bitcoin in every portfolio ideas or digital gold, what nation state sovereign adoption. Those were ideas that were explicitly priced by a lot of the market, I think.
Yeah. No, again, it's up for debate, but
Yeah.
What's not up for debate though is you've had very strong technical breakdowns.
Yes, that's right.
Bitcoin broke its 50-week moving average.
And you were saying that like every prior time you see that's also reverted to the 200-week.
Correct.
Right. Because it doesn't. The 50-week is like what it broke after the 2017 all-time high, after the 2021 all-time high, and we know that 17's 20 went all the way down to 3. 2021's 69 went all the way down to 15, 5, 16.
Correct.
That was that. We were here.
Yeah.
I mean, go back and see the block clock stamps.
Exactly.
Yeah.
So,
but that would place it, I think, now where in the 50, 60 range is where the 200-week is.
Yeah, but it's going to take time to get there. So I think.
Do you think it does get there?
I do think it gets there. It's just a question of when. And so if it. In theory, like the 200-week moving average is an upward sloping line. So if you look at it from where it's likely going to be in like June, September of next year, it's like 65-ish, 70-ish, right? And what I do know for sure, though, is that every dip to the 200-week moving average is a phenomenal buying opportunity.
It has been historically.
Historically unbelievable. I mean,
Right.
we're sitting, at 90,000 right now, right, effectively. And
Yeah.
so, yes, it's been an uptrend for a long time. So, yes, every time it dipped.
That makes sense.
But for me, I know for sure that level is going to get defended. I will be defending it myself personally.
Right. That's your
but,
downside target is the 200-week moving average, wherever that is.
Yeah. And I think that's just at the point where, at least for me, that's, where I'm going to have my bags that I will never sell.
You pack for the long haul.
For the long haul, right.
Very interesting. But so that just to clarify, though, this then is a thesis from you. We're in the early stages of establishing a full-on bear market then. That would be
technically speaking, you are in a bear market.
Right, which is what, a 20% correction?
20% correction.
But, in prior bull runs, there have been many. Well, not quite. I mean, what are we at? 35, 40% now off?
It's about 30%.
30% off all-time high. That would be at the top range of the bullish corrections that historically have happened, but not unprecedented. I think there's a lot of people who still think that, one more wick to 85 and then a V-shaped recovery and the trend continues.
To caveat this view, I will say that risks are a little bit more balanced, like short term. There are a bunch of shorts that have piled into the market, and the open interest is super elevated, and you've just come 30% pretty quickly. And so I do think that there is a little bit of two-way risk, particularly going into something like NVIDIA earnings,
which could be good.
Which could be good.
I think we're recording this on Wednesday, the 20th, the 19th.
Yeah.
If you listen to this right when it comes out, it'll be Thursday the 20th. NVIDIA reports after close today.
Correct.
Obviously, the largest equity in the world, and so key to where equity markets go.
And sentiment around AI, which has really driven this market this year. And so, I think folks will be, pretty glued in terms of what is, they say and what they kind of forecast on a go forward.
Yeah.
But there are some developments in equity markets that are concerning as well.
What are you
We've
looking
had
at?
the S&P, trade and close below its 50-day moving average. So that's, 1 point of alarm. So another point is, the VIX is trading on a 22, 23 handle. It's reasonably elevated. You've seen names like Meta perform, pretty poorly. You've had, hot momentum names like Palantir go from 206 to 170.
So some retracing has happened.
Retracing and rare earths, quantum computing. And, if you look at Amazon as well, that looks like it's breaking down a bit. And there's a lot of charts in kind of these big, large cap tech names that are a little concerning. And then globally as well, I think the DAX is, traded down to its 200-day moving average. You've got Nikkei, Kospi, FTSE also all having bearish technical developments at range highs after good years. And so it does feel a little bit shaky. Now, the question is, can NVIDIA beat by enough and change sentiment enough to kind of trigger the next leg higher? It's totally possible. You also have U.S. data out later this week.
Oh, we're getting data again.
We're starting to get data again. So the September payroll print comes out Thursday morning at 8:30. That's tomorrow.
When were we supposed to get that?
That is the first Friday of the month. So the first Friday of October, we were supposed to get it. And we are now in November.
Got it. And didn't they say also that, just as an aside, that we would never see the October unemployment numbers?
No, they're actually going to dual report it.
So they'll come out
in the November
twice
meeting.
with no.
Correct.
Got it. Okay.
So you'll get the October and November jobs print.
And where are you in your mind on the sort of economic macro, the jobs, the inflation?
So the main narrative in the marketplace is kind of like a K-shaped economy at this point in time, and what that really signals is kind of just the folks that are really wealthy versus the folks that aren't as wealthy, and kind of middle class to lower class folks, and kind of the disparities in their economic conditions.
So K meaning the higher part is going up and the middle to lower is going down.
Yeah.
So increasing inequality.
Correct.
Key theme in the market.
Key theme in the market, and you see it in the data, right? So if you look at student loan default rates, if you look at subprime auto default rates, if you look at small business sentiment surveys, if you look at other broader consumer confidence surveys, et cetera.
All of them breaking down a bit?
They're showing signs of stress, right?
Yeah.
If you look at like the leading indicator of like economic stuff, like it's also started to trend down. And then in terms of what you're actually hearing from companies, right, is that lower income consumers are actually spending less. Like McDonald's literally said lower income consumers are actually eating at home more.
Yeah.
And like McDonald's is like, probably one of the cheaper fast foods.
And it's the mass market too. That's for
correct. And so and same thing like with the Chipotles of the world. And so from the consumer side of the large US corporates, they're definitely signaling weakness in the lower income cohorts. Versus like if you're an asset owner, like property values are still fine. Asset prices are still fine, with the exception of crypto, obviously.
Mm-hmm.
And so there are some concerns. And then you had Fed minutes come out today, and you've had a bunch of Fed speak over the past couple of weeks, and the Fed's basically saying that they're probably not going to go in December. And the market pricing is down to 11 basis points for that meeting.
And it came to the probability of a 25% cut went from like over 80 before,
to less than 50, closer to 40%.
So now it's more likely than not that there isn't a 25 basis point cut.
And get this, even for the January meeting, there's only 22 basis points priced in.
So not even quite a full cut.
Correct.
Yeah.
And so you don't have that, Fed coming to the rescue kind of sentiment in the marketplace right now. And so, it's a very interesting backdrop. But you do know that, in 2026, you have a ton of CapEx coming. You've got the fiscal impulse from the big, beautiful bill, right? And so, I think that's enough to kind of keep things steady. And you're not going to have like, a huge cratering of the economy. But I do think that the probability of like a recession is probably mispriced.
It's more elevated than people think.
Correct.
Yeah.
And there's like the market's not, like people used to say, the market's not the economy. Yeah. Right. But more and more, I think it has gotten kind of ingrained in kind of like people's habits, right?
People like to trade the market based on how the economy is doing?
As in if the market goes down, it has a pretty strong feedback loop into like the real economy.
Do you think, is that because of the democratization of investing, fintech apps, stuff like that? That
yeah, absolutely. I think there's just like a really big wealth effect.
Yeah, and even though there's, a large portion of the economy that doesn't own assets, there are like maybe hangover from the COVID era, like a lot of people have Robinhood and
things
Cash
like
App.
that. But it's also like if you're a corporate, right? Are you going to lay people off with your stock at all-time highs, or are you going to lay off as many people? Now everybody's doing it because it's acceptable, AI and improvements. But you're probably going to be more likely to cut down on unemployment if your stocks move down by 20%. Right, you're probably not. You're not going to be as likely to buy a house if your 401k has gone down by 20%. Right, and so I do think that there's some risks out there that are kind of underappreciated.
Yeah.
But ultimately, like if we do see a correction in equity markets, which I am a little concerned about, I do think that dip will get bought. And so I don't really think it's like a 10 to 20% correction. It might be more on the order of like 5 to 10% if you get it. But what's really troubling though is that I think you're in an environment where risk assets can trend higher, and it might not. Crypto might actually not follow, right? And
Right.
and that decoupling is kind of what's been concerning.
And that's what we've been seeing
Correct.
so far. Obviously, a little bit of squishiness in like equity markets in aggregate, like the indices and stuff. But crypto trading, I mean, Bitcoin specifically as the example, trading well lower than this mini dip that we've gotten in equities over the last couple of weeks.
Yeah.
And so I think one question had been, well, is it sniffing out the weakness in equity markets? Is it leading? Which,
Potentially.
story still yet to be told. But
Correct.
Or is it something more crypto native, right? Like, is this just like high beta on equity risk, or is it something more?
I mean,
It feels like something a little different and more.
it's possible.
Fatigue with Bitcoin and crypto and,
yeah, I
and the
think-
DAT reflexivity and
Correct.
those things, not purely just high beta on a, we would have, what were 2.5%, 3% off all-time highs in S&P, not just like that high beta, like, 2.5% off S&P equals 30% on Bitcoin.
Yeah.
It feels like there's something crypto native happening.
No, I completely agree. And what I tell people is, folks that have been on the crypto journey, we were sitting here in 2023, 2022.
I think like January 23 was like our first video episode or like our second. And yeah, it was 16.5 to open the year.
16.5, right? 2023, 16.5. Basically, in the span of like a little over 2 years, you have gone to 120K.
It was like an 8X.
Right, and so like that's a phenomenal trade.
Yeah.
Anytime you hit a 5x, a 6x, you're gonna have a lot of profit taking.
Yeah.
And even no matter how strong the fundamentals.
Right.
Right. And so I think there's an element of that. There's an element of a lot of folks believing in the cyclicality of Bitcoin and crypto over time. And so I think that's kind of what you're seeing. Now, I will say that, it was probably a lot easier to, take risk off at above 100K. And doing so at 89 is a little bit more dangerous.
Right. This is what you're talking about, a more balanced risk now.
Yes.
Right. And you're talking about the enormous amount of short interest
Yes.
in Bitcoin, and that can cause short squeezes too. But so you're thinking about a sort of a volatile trend lower to the 200-week moving average. That's basically your base case now.
That is my base case.
Yeah. So but again, that means, be careful with leverage because it's not a nice straight line.
Be very careful.
But if you're talking about packing your bags for the long haul at a target you have in your mind, then I think I know the answer to this. But to what extent does this price action, whether it's I don't know if it's a decoupling or the from equities or anything else, sentiment, the DATs that where there were way too many, and presumably they'll ultimately probably be fewer of them. Have any, or just the price action itself, is that dented your longer term fundamental thesis about Bitcoin?
No. Long-term thesis is still strong, robust, as it's ever been. I think the math on it actually increases every day if you look at the national debt and, how things are governed. And so, no, like it has not dented. I'm still a Bitcoiner. And, I do think that I will see, 200K within the next couple of years.
Yeah, and you're also you're also a trader.
Yes.
You don't like, so for example, I gave up trying to trade Bitcoin a long time ago. I think Phineas was saying this before we started recording. We sort of just look for good buying opportunities.
Yeah.
Your day job is to trade markets among whatever else it is you do here and podcasting.
Yeah.
So you do also need a short term view. I just want to make that clear for people on the pod. I think anyone who's watched the show knows that.
Yeah.
But yes, you're looking at this in that sense. It's you're hoping to get lower prices.
I would love.
And I think there's a similar sentiment from a lot of Bitcoiners, like online, that long time true believers that
Yeah, and I will tell you,
you're getting better prices.
Yeah, and that's the flip side.
It's cheaper for you if you're a long-term bull. That's good.
Yeah, and here's the flip side. Like all the, quote unquote whale selling that you've seen.
Yeah.
Right? These guys are also whale buyers. They were whale buyers at some point, or whale miners. And they're people that believe in Bitcoin.
Yeah.
They're just like, I'm going to wait for better entry levels. Right.
A lot of them, yeah.
A lot of them.
And
so you will
we've talked,
see folks
we know a lot of
re-enter
those.
the market
So now it's
at
kind
value
of like,
areas.
yeah. So now it's kind of like that sort of like game theory, like because this is where it could get out of hand to the upside again. Is like if the market tries to sniff out a bottom, whether it's all the way at the 200-week moving average or somewhere, whether it's here or lower than here, wherever it is. Some people who are waiting to buy lower might start to feel offsides, and then
there's going to be reflexivity back to the upside.
Yeah, because there's a point
Goes
where
back
it's
and
like,
forth.
wait a sec, are we meant to buy again now?
Yeah.
And usually if you're asking that question, you've already missed the bottom. And by the way, most people shouldn't try to time like crazy, like but because that's the one thing that I know a lot of people are wondering. My friends, people that we talk to that are long-term bulls as well. Well, okay, where's the bottom so we know when to pack our bags, right? And no one knows the answer to that. I think you've been very transparent and thoughtful about explaining your thinking on this. I see very little of that in the market, of people explaining truly like what they're – I mean, honestly, even bearishness. People – I lowered my end of year bull target, not the only target.
Yeah.
I mean, that's a little bit of parsing hairs here because I did say that like if you were bullish, then a more reasonable target than 185 would be 120 by end of year.
Yeah.
In retrospect, it's like, I mean, and I was called a dirty bear for that. Obviously, like, I mean, I'm going to look excessively bullish, most likely, unless something crazy to the upside happens in the next month.
Yeah.
It just makes me wonder. That's what I'm hearing. I'm not hearing a long-term breakdown in the fundamental belief in Bitcoin. It's a malaise about trading it and buying it here.
Correct.
But that also
And it's technical. Like
it is
depth,
technical, and it also tells me that we haven't bottomed because people aren't backing up the truck to buy yet that I can see.
Correct.
And like it's not that those people time the bottom perfectly. They create the bottom by backing up the truck to buy. Right, and it just doesn't feel like we've gotten that yet. So
I think you need to kind of see, mass capitulation.
And we don't. I mean, I will
doesn't
say
feel that way
I think
right
this week, I think yesterday's number reported by IBIT was which I believe means
$560 million,
which is the single largest day outflow of IBIT in its almost 2-year history. So that's a signal. And then the other thing is that, but that means it's Monday, right? I forget. Their
Correct.
whole thing's a day late. So Monday, IBIT redeemed in the biggest amount ever. So maybe we're getting there, but I agree. It still feels like a slow bleed down.
Yeah.
And usually I feel like these bottoms are characterized by like an aggressive wick lower.
Yes.
That then gets people back up the truck.
Liquidations.
Yes,
Yeah.
some liquidations, but then some high volume rebound
Yeah,
usually,
so
and we haven't
which
quite
is-
seen that.
Yeah, and we've just been going down in a straight line. Like I haven't seen like sizable short licks in a while.
I know, and it was like we haven't like we rebounded off 100 to like 103.
Yeah.
Then we got to we saw 98.8 I think was after that first break of 100.
And then just right back down.
And then right back up to 103, but then it just bled. Then we pretty easily just drifted down to 95, and then that was briefly some support, but it wasn't like it wicked. Like it's just kind of trending lower pretty steadily.
Yeah.
It's actually not staircase up, elevator down. Really, it's really been kind of like staircase down for 7 weeks. Like the weeklies are, I think.
Yeah.
We had one where we were just barely a green candle. We were nearly 7 weekly red candles in a row, and I haven't gone back to look, but I've been watching this price for about 10 years, more than 10 years. I don't think we've ever seen 7 red weekly candles, even 4, which we have had now locked in 4 red weekly candles. I think is like very, very, very rare. Like, so it's been pretty consistent drift lower. It just doesn't, to me, feel like the aggressive sharp wick down that creates the V-shaped bottom that bottoms typically
I
have been
haven't seen
characterized
enough to characterize us as being bottomed yet. I haven't seen enough.
Yeah, and as a long-term buyer, you're looking for that.
Yeah, absolutely.
Well,
and again, you don't like, the big thing about like bottoms and tops is that you can be a fast follow.
Right.
Right. You don't actually have to try to top tick or bottom tick.
Especially if you have a long view.
Correct.
Right.
And so once you start to see, like, if you buy within 5-10% of the bottom, you're going to be fine.
Yeah.
Right. If
Well,
you
you're
sell
gonna-
within 5% of the top or 10% of the top, once you get that sense or whatever that development is that triggers you, you'll end up being okay.
Definitely. Don't try to.
Yeah.
And that's the other thing too. Like I know a lot of Bitcoiners who like to DCA, and stack, I mean, you're just automatically getting better prices. Basically,
Yeah, you're
if
improving your average.
So I would say, and just for more to put a fine point on it, like we talk to a lot of people interested in Bitcoin and crypto investing. I don't hear a lot. In fact, on X.com, there's a frankly an almost played out conversation about the institutional versus retail divergence. I mean, institutions seem more bulled up on Bitcoin and blockchain technologies and tokenization and state than ever before.
Yeah.
Meanwhile,
I mean, you had like what Abu Dhabi report buying the other day,
and they said they were buying it as part of a long-term position. I mean, this is
this is
that's
fundamentally
conviction.
bullish. Yeah, over
the
the long
Czech
run.
National
Yeah.
Bank last week bought $1 million.
Test transaction.
That's what they
absolutely.
said, though. But keep in mind that they also said back in January that they were exploring putting 5% of their reserves into it.
Oh, yeah.
And that caused Christine Lagarde to have a conniption because they're like a member of, I forget what it's called, but like the Council of Central Banks in Europe, the CNB is.
Yeah.
So now it's kind of like, and they did take pains to say it was just a test transaction.
Yeah.
But to me, it's like, well, first you hate it, first you ignore it, then maybe you hate it, then you acknowledge it, then you test it. I think we know what comes after that. So important first step that's the first central bank in history, I think, to have purchased Bitcoin. So yes, they didn't say it was like, unlike the Abu Dhabi fund, they didn't say it was due to a long-term bullish view, but they weren't saying it was, but they were asking themselves publicly in a report they put out in January whether it should be part of a long-term view. And now it almost seems like they're sort of calling it a test transaction so that the ECB doesn't get mad at them, basically. And it is small, but yeah, I think there are signs though at the institutional levels that this is still everyone's still in. It doesn't look like a true breakdown in confidence long-term.
Yeah, I think it would take a lot. I think there have been too many people that have been orange pilled for you to get like an ultimate breakdown.
I mean, I was just in a meeting.
That's just not possible.
I was just in a meeting at a large bank, and both from our side and their side, it's long-time financial professionals that love Bitcoin.
Yeah.
I mean, when I first started getting interested in this at Fidelity, it was like me and 3 other dudes at Fidelity. and to her credit, Abigail Johnson herself, yes. But like, I mean, the scope of and breadth and depth of people that are interested in Bitcoin now is just like, orders of magnitude higher and wider than it has ever been. So I agree. I mean, I think if you're a long-term bull like you are, you're looking for an entry. Yeah. And so, but my gosh, what a strange year. Right? I mean, Bitcoiners got
a roller coaster.
I guess aside from an announcement or the actual action of the government buying Bitcoin for a strategic Bitcoin reserve, I think they've pretty much gotten almost everything else you could have ever wanted.
Yeah. Everything else got priced in.
I mean, I think if a central bank had bought Bitcoin in like 2018, dude, that would have been like a 40% candle or 30% candle. Now it's just like, everyone's buying Bitcoin.
Yeah.
That's almost part of the story is the malaise is sort of like, well, it's not really contrarian to like Bitcoin anymore. Not quite. It is, I guess, just a little bit maybe, but
it's very mainstream.
It also means you're not early.
Yeah.
Right? I mean, what are we? Yeah. You're not quite late, I don't believe at all, but I mean, let's face it, you're not early.
I worked in the industry for 5 years.
Right. Right, and you were new at one point.
Yes.
This used to happen when I would interview researchers to join the team. They'd be like, oh man, like I just joined, I got interested in 2022. And I'm like, oh, dude, you're brand new. And I was like, wait a sec, it's 25. That's 3 years ago.
Yeah.
Like that's actually a fairly long time to have been interested at this point. I guess I'm also saying that we're getting old.
Dude, I got the gray hairs to prove it.
Yeah.
Well, awesome.
Well, Beimnet Abebe from Galaxy Trading, the bear who was right. We'll see if he continues to be right. I told you, if you want Beimnet to not be able to stack at his level, then bulls need to defend these levels to prevent Beimnet from being right, okay?
Awesome.
But congrats and thank you, my friend, as always.
Pleasure.
That's it for this week's episode of Galaxy Brains. Thank you to our guest and friend, Beimnet Abebe, and my friend, Phineas Ellis, from Studio Friends. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.